In just 3 weeks, over $5 trillion in market value has disappeared, and the biggest tech stocks, the so-called Magnificent Seven, has lost a massive $3.3 trillion since December. What's going on, and what does this mean for you as an investor? Let's break it down in simple English. Let's start with the numbers first. In just 3 weeks, the US stock market has lost $5 trillion in value. That's more than the entire GDP of Japan. And the Magnificent Seven, Apple, Microsoft, Nvidia, Google, Amazon, and Meta and Tesla, have taken a huge hit, down $3.3 trillion since December. You can see the list of the stocks and their associated losses. These are big numbers. So that's 87% of the total S&P 500 market cap loss. That's huge, guys, okay? It's not a simple pullback. It's a big pullback. And these are big losses for the biggest companies in the world. So why is this happening? There are a few key reasons. Number one, of course, this trade war fears, right? The US and the Europe are threatening each other with new tariffs. The US wants to hit European imports like wine and spirits with 200% tariffs. Europe is pushing back with tariffs of its own. Markets hate uncertainty, and this is making investors really nervous. Number two, the Federal Reserve's next move. Investors have long believed in the Fed put, meaning if markets crash, the Fed will step in to save them. But guess what? That might not happen this time. The Fed still worried about inflation because since they started cutting rates, the bond yields went up. So they may not cut rates anytime soon. That's adding to market trouble. With all this uncertainty, where are the investors running to? Well, that's where the gold prices are rising. The gold has just broken $3,000 mark, okay? And people want a safe haven from stock market mess. So what you should do, first of all, don't panic. Market corrections happen. It's a cycle. We had a bull cycle, now it's perhaps a bear cycle. It may not last long, or it may move sideways, who knows? But if you have strong companies in your portfolio, if you have profitable companies, revenue generating companies, Bitcoin in your portfolio, then this is a buying the dip opportunity for you. So you can DCA it, you can lower your average cost down, because over the time, this will play out hopefully very well for you. If you are actively trading US stocks, FX fees can quietly drain your profits. A lot of platforms charge $15 to $18 just to convert Canadian dollars to USD. Moomoo offers one of the lowest FX fees in Canada. On a $1,000 trade, you would pay just $2.90 in conversion cost. That's up to 90% savings compared to other platforms. And Moomoo gives you free level 2 market data, stock screeners, and technical analysis tools, insight that usually cost extra elsewhere. And while you're waiting for the right trade, your uninvested cash earns 6% annual interest. More money in your account, more opportunities to invest. If you're looking for a low-cost, high-value platform, Moomoo gives you the tools you need to trade smarter. And if you sign up today, you will receive a $2,000 commission card, plus deposit $100 and get $50 in stock cash coupons with up to 50% cash back. If you deposit $2,000, you will receive $150 in stock cash coupons. Don't miss out on these incredible opportunities. Start your investing journey with Moomoo today. The second thing is diversify, okay? Don't just rely on individual tech stocks. Buy ETF. Buy commodities, buy precious metals, right? And third, keep an eye on Fed, because if they hint at rate cuts, the market could bounce back very fast. Keep an eye on the money supply as well, because right now it is trending upwards. So that will tell you the future may look better in terms of a comeback. Anyway, these are just my thoughts. You let me know what you think about that. Put your comments down below. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care.